Okay, so the attendees have started to stabilise now in terms of people joining, so we'll get started. Hello everyone, welcome to today's webinar. My name is Aidan Corcoran and we will be doing the webinar on making tax digital for income tax, everything you need to know as a self-employed individual. So, what we'll be looking at today is what to expect, when does it start, how will it affect your tax reporting, transitioning to MTD, which will be the digital record keeping, the requirements and adjusting to the change, deadlines and payments, and then into a conclusion. Hopefully you've all got a notepad ready, as the majority of information is going to come from me with just visuals in front of you for each slide. So let's get started. Before we do get started though, let's just drop onto a poll. And do you know what making tax digital is? We'll get that started there. So you basically, are you aware of MTD for income tax? If you just vote on your screens now. And once the majority have voted, I'll publish the results and we will get started. So from the people voted so far, there seems to be quite an even, very even, in fact, in terms of whether people are or aren't aware of MTD. So hopefully, as we go through this webinar, you'll be taking some notes down, making some points of what you need to go and look at a little bit further in more detail, and hopefully you'll learn something today. So it's stabilized now, so we're looking here and we've got 8 people saying yes and 8 people saying no. So hopefully everyone learned something, but at least I know that 8 people will definitely come away with something from this webinar. So hide those results now and let's go back to the webinar. So first of all, what is making tax digital? So what is it? So basically it is the restructure to the current self-assessment system. There will be more in real-time reporting / submissions in comparison to the current self-assessment system. Currently, we've got the tax return, which you do following the year end and up to the 31st of January, if you want to submit it on time, of course. What Making Tax Digital is basically doing is allowing HMRC access to more information in real time rather than waiting until after the tax year. So we'll go into a little bit more detail later on in this webinar as we're just touching on the basics now. Also, what to expect? Well, what to expect is more submissions. You'll have quarterly submissions, end of period statements, and a final declaration. Once again, elaborate on those a little bit later on. It's also including technological advances in software. So when the self-assessment system came out in the early 90s, that was cutting edge technology at the time, and also allowed people to submit by paper. As we have quite massively advanced in technology in recent times, especially over the last 10-15 years, HMRC are now playing catch up and believe that this will help people submit quite more often / easier, and B, let them keep track of what tax they are to expect. There has been a crackdown in the most recent tax years in terms of people not paying tax, primarily those overseas with offshore accounts, but also people that are self-employed and aren't declaring all of their income. So it's basically digitizing things to have a crackdown on missing tax, but it should also help the majority of individuals that grasp the new regime. So when does it start? Well, it is due to start April 2024. This has been delayed a couple of times already, but from what I've read and what I know from HMRC, they do not plan to delay this any further. It's already been delayed twice, and there's quite a lot of pressure on HMRC now because they've invested quite a lot of money into it to get it started. So from April 2024 will be the first year of MTD. However, there is a soft pilot currently running, which we'll speak about on the next slide. And basically, the people that will be affected are yourselves, self-employed individuals. Once your turnover, which is just straight line your income, reaches over that 10k mark, you will fall within the regime, which we'll touch on a little bit later. So hopefully that's given you a brief understanding of what is Making Tax Digital, what to expect, and when does it start. And now we'll just go into the pilot scheme. So the pilot scheme is effectively registering with HMRC to join the MTD regime now, and you can sign up now. You're limited to who can join. Currently, it's only if you are a UK resident, registered for self-assessment already, and you are a sole trader or a landlord. That is a big thing. You can only be one or the other currently. They were aiming to release or expand this criteria from April last month, but there actually hasn't been any announcements from what I've seen, bearing in mind that I do check regularly. So if they have, then they've not done a very good job, but they were meant to expand that from last month. So I'm assuming either towards the end of this month or potentially next month, they may update the criteria so more people can join. But currently it is quite limited to who can join, and therefore you do need to fall within those requirements. You can't join if you've received any of the HMRC grants over COVID. So that is the coronavirus job retention scheme, if you employ people, and also the income support scheme grants. So if you received any of those in the last couple of years, then you can't join the scheme. Likewise, if you have tax relief, such as losses to be claiming, I believe you can't join that pilot scheme either now. And you also can't receive income from other sources. So, for example, interest, dividends, etc. If you receive any income from those, then you can't join this pilot scheme. But that doesn't say that you can't follow it anyway. So as we go into the build-up of what MTD is, you can sort of follow it in terms of how you're organising yourself, but just not registering with HMRC up until you need to later down the line. So transitioning to Making Tax Digital, what am I required to do? Digital record keeping, and what is the minimum required? So looking at this in a little bit more detail, what are you required to do? Well, basically you are required to do quarterly submissions, which will be 4 per year. These are basically estimates, and I say that with inverted commas. They have to be fairly accurate, so then you do benefit from these submissions, and HMRC will, per each submission, send out an estimate of your tax due for this period so far for the tax year. So these quarter submissions will literally just be straight line, money in, money out, income and expenditure for the 3-month period. Also, in inverted commas, quarterly submissions, this is the pure minimum that you will need to submit. You can submit them weekly, monthly if you wish, but there is a minimum requirement of a quarterly submission. So HMRC are allowing more submissions than just the 4 per year for the quarterlies, but I'm just going off bare minimum of what is needed. So that is basically the income and expenditure submissions per quarter. Going on to the end of period statement, and this is effectively all the adjustments, the accounting adjustments, tax adjustments in relation to your business. So on your end of period statement, you will have disallowables if you haven't already included them in your quarterly submission. So any private use of any expenses or anything that is an accounting adjustment such as depreciation, these end of period statements will add back those expenses. This is due once a year and is due by the 31st of January. It is worth noting that they can be submitted more frequently as well if you want a more accurate tax position as and when you submit your quarterlies. So bare minimum one is needed at the end of the year just to include all the adjustments and also capital allowances. But if you want to include them with the quarterly submissions, as far as we're aware at this moment in time, yes, you can submit them more frequently. And that moves me nicely onto a final declaration. So the final declaration is effectively replacing the tax return. The final declaration in terms of making tax digital for your business, your self-employed business, basically crystallizes what tax is due. So once you get this final declaration submitted, that is you basically saying everything I've included in the quarterly submissions and any amendments to previous quarters and the end of period statement is all correct. And this is what you can now calculate my final tax bill on. And I am approving that this is all legitimate and correct. Along with the final declaration, you'll also have the entry of all your other income. So if you do have, for example, property income, potentially trust income, dividend income, interest income, etc., then you will also declare that within the final declaration. So it is just replacing the tax return currently. I've just been instructed to have a look at a question right now. Let me just have a look. If I'm using your system now, will this move over to the new MTD arrangements in 2024? So yes, it will. We are currently in the development phase of the software, which we do aim to have prior to 2024. So our users can get used to what is required and what the software looks like. So yes, Jeffrey, in terms of will our system be moving to this? Yes, you'll have the current software which you have now, and then there'll be an MTD compliant software working in tandem with the system. So there will be no doubt a webinar done by myself more than likely, demonstrating the new software once it's available. But currently it's just in development, but we'll have it available shortly. So moving back onto the slides, and that moves me nicely onto digital record keeping. So in terms of HMRC's definition of digital record keeping, you can do this with spreadsheets, you can do this with cloud software, you can do this with a mobile phone app, and you can do this by keeping a spreadsheet that links to a bridging software. So just going into these in detail a little bit more, you will have spreadsheets whereby you can track your income and expenditure, and it will have specially designed APIs, which is basically application interface where it links to HMRC servers. And when you have the information in there, you'll be able to submit your quarterly submissions and other submissions direct to HMRC. Cloud software, which we could fall under as we are working on the cloud on the web browser. So basically you would log into your software, whatever you're using, or using the mobile phone app, and track your expenditure as and when in there. You can attach the receipts if you are familiar with that capability at the moment, and that will be a full digital record keeping under MTD compliant. And then finally, bridging software will literally be keeping a spreadsheet of some sort and then having an import of those transactions, so to say, in a particular format, which will be uploaded into a system and be able to submit directly to HMRC. Digital record keeping, you will need to keep complete digital records. On Go Simple Tax, as some of you will already know, you have the ability to attach receipts per entry, or you could have one PDF with lots of receipts and have a overall entry on Go Simple Tax on there. So make sure that you do keep digital records in terms of your receipts, or you could always keep a OneDrive or a Google Drive separate with copies of all your receipts digitally away from Go Simple Tax if that is preferable to you. Going forward, HMRC will not allow for paper record keeping. So if you do have the paper records, as soon as you take a picture and you've saved them and backed them up somewhere, then you can get rid of them because you won't be required to keep them in paper form going forward. Moving on to the next point, and we have the minimum of 5 updates per year per business. So in terms of quarterly submissions, you will have the income and expenditure, which I've mentioned previously, for a particular quarter. So, for example, first quarter will always be April, May, June. And that will be your income for April, May, and June, along with your expenses, will need to be submitted by the following month. And I do quote that this is tax months, which I'll go on to on the next slide, which always ends on the 5th of the following month. So I'll mention that shortly. So you'll have 4 submissions for that, and then you'll have 1 end of period statement, which is expected with the final quarter, which is also expected with the final declaration. So looking at these, that is just primarily 5 updates as a minimum. I did mention before that you can submit more often than quarterly, and you can also submit the end of period statement more frequently than once a year if you want to include your adjustments as you go along. So where we're currently looking at the self-assessment system, which is due once a year by the 31st of January, we'll now have at least 5 times more than that. Overall, it'll actually be a minimum of 6 because you'll have 4 quarterly, 1 EOPS, and 1 final declaration to submit. So there's a lot of work to be doing in the same amount of time, which you would usually just do 1 form. So just have a quick break while I grab a drink. And then we'll move on to deadlines and payments. So, once again, these lovely, lovely, lovely headings, which you've seen pretty much in every slide, I think, so far. I will now go into a bit more detail on each one and what each one entails. So, quarterly updates is per business. If you've got 2 separate self-employed businesses, you will need to submit 2 separate quarterly updates each quarter for each business. That is a lot of submissions if you like to dabble in a few different pies. For example, or in my example, if I basically delved into the personal training world, so I am a qualified PT, whereby I have some clients and I'm classed as a self-employed person through that. Along with that, or should I say separate to that, I also have gym clothing in like sets for both male and female. And basically from that, I've got 2 separate self-employed businesses. I've got a clothing business and I've got a personal training business. In my case, I will need to submit a quarterly report for my personal training business each quarter, and I'll also need to report in the same quarter a separate quarterly update for my clothing business. As I mentioned, these are a minimum of 3 months, and an example of dates and submission deadline would be the first quarter would actually be the 6th of April to the 5th of July. As I said before, that is the official tax month is always the 6th to the 5th, much like the tax year. So you'll have the 6th of April to the 5th of May the 6th of May to the 5th of June, the 6th of June to the 5th of July, and that will be due the month after, which will be by the 5th of August. It is worth noting that with the basis period reform, that regardless of your accounting year end, these will be everybody's quarterly updates once MTD comes in 2024. There is actually an alternative method which people can elect for, which is called the calendar quarter election, and that basically moves from the 6th to the 5th to 6 days earlier to the 1st to the end of each month. So in this example, rather than the 6th of April to the 5th of July, it will be the 1st of April to the 30th of June. However, the deadline still stands at the 5th of August for the first quarter. It may be worth some people taking note of that. It's called the calendar quarter election, and it basically just aligns it with the months rather than the tax months. So that will be an election that you'll have to notify HMRC of once MTD comes in. In the quarterly updates, there will be no adjustments required. So there'll be no capital allowances included, there'll be no disallowables, there'll be no add back of certain things as well, such as depreciation. This is just straight line what your income and expenditure includes. HMRC will send an estimate of your tax each time you do a submission, and they will basically see what you've earned in that quarter, and I'm assuming times that by 4 and expect that's what you would earn in the year. For those that have seasonal businesses, such as, let's say, Christmas decorations or something of the sort, then there would be a fluctuation in terms of what tax HMRC would be calculating, because obviously if you're busy in the winter and quiet in the summer, then when you first do your first quarter submission in April to July, I'm assuming that there'll be next to none in terms of sales. And then as you start getting into the third quarter in terms of Christmas, sales should be booming. So that will be, so to say, an inaccurate tax reading from HMRC as you submit your first couple of quarters. But by the end of the year, you'll obviously know where you're up to, and you knowing yourself that you're seasonal will mean that you can prepare for this as you're going along. Moving on to the end of period statement, the EOPS, and this is once again per business. So I'll need to submit at least 2 of these during the year. You include all tax and accounting adjustments, and it basically finalises each business's accounts for the year. Once again, the basis period reform is basically whatever your tax year end is, whatever your accounting year end is, you no longer look at when it finishes and what tax year it finishes in, and then that full 12 months drops in. It is now just whatever you earn in that particular month is what falls in with that quarter. It should, and I say should, it should simplify in terms of anybody who has overlap profits or anything in terms of adjustments towards tax years. This should all fall out of the system and make it quite simple of everyone's got the same quarters, therefore everyone has to report per their months. And the EOPS, the end of period statement, will be due by the 31st of January, much like the current self-assessment tax return deadline now. So following the end of the tax year, you'll have the end of period statement due by 31st of Jan. Which moves on to the final declaration. And as mentioned previously, it crystallises the tax due from the quarterly and EOPS submissions, as well as includes all other income. So then you get an actual final tax position. So the tax updates that HMRC is sending throughout the year from your quarterly updates and your end of period statement are relative only to your business or businesses, plural, if you have more than one. And then the final declaration, if you've got other income, expect to have an additional amount of tax due because they didn't know about that previously, and therefore the final declaration fully allows you to have your final tax position once you've got them all submitted. And as mentioned previously, the final declaration is effectively replacing the tax return as the 31st of January deadline submission required to include everything. Moving on, and onto the final point of this slide, is payments are due in the normal way, which are the 31st of January for your main liability. And if you fall into payments on account, then you will. If you fall into payments on account, then that will be due on the 31st of January and the 31st of July. There is speculation from when I've been reading and updating myself in terms of MTD of in the future, it may well be that payments get updated to 4 payments on account, and this will be pretty much in real time rather than following the end of the tax year and into the next tax year in terms of July. Basically saying that following how MTD for VAT works, whereby once you submit your quarter, you've had that income as you've explained or submitted. Therefore, you should have the estimate tax due readily available to pay to HMRC. So only speculation at the moment, but there may be potential in the future that the current 31st of January and the 31st of July deadlines for payment do expand into a 4-payment regime. So let's move on into a conclusion. And we currently have touched on the basics in terms of what MTD is, who will be affected, and all that sort of information. So just to conclude, in terms of what needs to be required going forward. So there'll be small changes will be required as a minimum. For everybody using Go Simple Tax, you'll there or thereabouts already be following such as the digital record keeping / using an online software, cloud software, mainly for the part that you'll be doing your electronic submissions already, and you may be using the features that are available to you in terms of saving receipts digitally within the software. The minimum changes here will be the fact that you are currently submitting once a year, and there will be 4 submissions quarterly, and there will be an end of period statement in addition to the once a year submission currently. It's always best to start planning now. There's no point in waiting until April 2024 when it first comes in, realising that your turnover is over £10,000 and then panicking, not understanding where to go and what to do. For those who were on the poll to begin with and answered the first one as no, hopefully that has now changed to yes. You understand that MTD is going to be for pretty much everyone. There are some exceptions to the case, such as those with a disability, whereby they will struggle to use the electronic systems. Those that are of an older age, whereby they haven't grasped technology as it has developed. Whether you're in a remote location where you struggle to get internet access, or whether by religion you are forbidden to use technology that is currently being developed. If you do fall in with any of those exclusions, which would be the age, disability, location, or religion exclusions, then you will need to apply to HMRC and they will need to approve those exclusions for you. So moving now, basically follow the compliance now. If you can keep your records up to date, so for those that use Go Simple Tax and have paid for the 22-23 tax year, we're currently 1.5 months into this tax year and you have access to this tax year on the system. If you were to update these every quarter, for example, or even at the end of every month, keeping in real time, keeping up to date with where you are at in terms of your income and your expenses, you can follow the compliance now and keep up to date. So it's not a big change for you when it comes into legislation in April 24. And finally, looking at what you can use going forward. Are you going to be using the spreadsheets method, whereby you can track all your expenses on a spreadsheet and then just include the bulk of it onto Go Simple Tax for it to be submitted? Or are you going to use something else? So start asking yourself, what will you be using going forward? And hopefully it will be staying with us, as we will have a seamless transition into the MTD realm, so to say, once it becomes available. And like I mentioned, no doubt there will be a webinar of the full version released, and I will be demonstrating, or someone will be demonstrating what is going forward. So I've added a little emoji in there, as I believe that a lot of people will probably be sat there going, oh dear, there's a lot to take in. So I'm going to invite you to ask as many questions as possible. Anything that you want me to go back on in terms of flicking back to the slides and reiterate any points, let me know. And I will flick back and answer. If you've got any questions that are relevant to yourself, then provided they are to do with making tax deductible for income tax as a self-employed individual, ask away, and I will happily answer them. Now the poll there. There we go. So moving on to a Q&A now. I did answer Jeffrey's a little bit earlier. I'm just looking, and someone's just apologising that they've left and they'll be on the registration later. Sorry, I missed the date when it comes into effect. Please, can you confirm? So, in terms of when it comes into effect, it comes into effect from April 2024. So, April 2024 is when MTD first comes into play. From April 2024, your first quarter will be April, May, June, in tax months or calendar months, depending whether you do the calendar election. So yes, in terms of what is required, you will have anybody with turnover, so that is basic turnover, ignore all expenses, basically income of £10,000 or more, you will drop into MTD. So I believe currently HMRC are looking at this from your previous year. So for your 23-24 tax year, if your turnover is 10k, they would expect you to register unless there is a big change in terms of your income in the following year. Hopefully that has answered your question. Following on to the next question, and we've got, will there be anything special that will apply to non-UK residents? As far as we're aware, no. Non-UK residents will fall under the same reporting tax regime as UK residents, provided that you have got income that is reportable in the UK and the turnover does exceed the 10k that the criteria states. So non-UK residents will fall within the regime if they have self-employed income which is taxable in the UK of over 10k, or their rental income, gross rental income exceeds the 10k as well. Another question, bear with me 1 second. If you earn income from employment, self-employment as a sole trader and property, will I be required to submit 3 separate quarterly submissions? In terms of that, no, you will not. You will not need to submit a quarterly submission for employment, as that will be done through PAYE and that will be declared on the final declaration. So employment, it isn't included in terms of making tax digital. Your self-employment, sole trader business will have quarterly updates, and at the same time you will also have property quarterly updates to include as well. So effectively, you as an individual will have your sole trade business and property business quarterly updates, minimum of 4 per year, which will actually be a total of 8 because it's per business. You'll have an end of period statement for both the sole trader to submit and a separate one for your property. So there's another 2 submissions, and then you'll have your final declaration, which will include your employment income and any other income, interest, dividends, etc., which you may have. So overall, you will have 11 submissions under MTD from April 2024. So as you can say, there's a lot more work involved in terms of keeping up to date with your submissions and deadlines than there is currently, because like I've said, there's one currently tax return submitted or due for submission by the 31st of January following the year end. Now we have, or you have, Darren, potentially 8 submissions overall between the beginning of the tax year and the normal due date of a tax return. So over the course of, is it 21 months? There or thereabouts, 21 months, you'll have 11 submissions for a particular tax year. Moving on to the next question. I hope that answered your question, by the way, Darren. For 23-24 tax year, does it still apply to the annual tax return? Yes, it does, Marco. You will still be due to submit that by 31st of January following the end of the tax year, which, if you actually think about it, will then coincide with quarterly submissions as well. So whilst you are submitting quarterly submissions, you'll still have the previous tax year to submit in that same period. So it is worth getting your tax return in early for 23-24, so you don't actually forget about that in the whole panic of MTD coming into legislation. Next question. I draw a pension, so I take it these will align to the final declaration and EOPS along with P60 interest of savings. So in terms of if you have a pension and only a pension along with the interest of your savings, then you would not fall into MTD and you would actually just still stay within the tax return regime. Only those with self-employed businesses or property will fall within MTD, and therefore they will have the additional submission requirements. Anybody who doesn't fall within MTD will still follow the same legislation currently as a tax return. I hope that's answered that question. Moving on to the next question now. I'm a tour operator. I need to defer income from the year it was received until the year the trip happens and when expenses are incurred. The reason for this was highlighted during the pandemic as we had to refund the money to clients who cancelled the holidays. Can I still defer income to a future tax year with MTD? No. The answer is no, on the basis that in terms of the quarterly submissions, from what I've read so far, these would be considered on the cash basis. And once you come into the end of period statement is when you would include any adjustments. So with the basis period reform, all tax years will be taxable from when money's coming in rather than any in terms of accounting periods. So if you currently perform on the traditional accounting or accruals basis, then you will probably have to include adjustments in the EOPS end of period statement, whereas the quarterly submissions are based off the cash basis, and you would only include them in there if money has been received. I'm assuming there will be more information available on whether the cash basis or traditional accounting basis is used once MTD comes in. It might be worth having a look out for that. But if you wait until close to the time and submit a support ticket in terms of what you've basically asked there, we will be able to update you closer to the time in terms of whether you would include the accruals or not of money for trips paid in advance. Hopefully that has answered your question, Anne. moving on to the next question. I would like to know, when is the first quarterly updates we have to do for self-employment? So provided that your turnover in 23-24 tax year exceeded 10k, you'd have to register for self-assessment for MTD from April 2024, and your first quarterly update would be April, May, June of 2024, and that would be due by the 5th of August 2024. So the first 3 months of the tax year, April, May, June, and it is due by the following end of the following tax month, which would be the end of July tax month, which is the 5th of August. Next question. I have a pension and also self-employment. Will pension, interest, etc. need to be included in the final declaration? Yes, Veronica. Your self-employment will fall under MTD, and your other income will have to be declared on the final declaration. So the final declaration is the same as the tax return deadline, as I've mentioned previously, which is the 31st of January, following the tax year. And then your self-employment business under MTD will have the quarterly submissions, which will be 5th of August, 5th of November, etc., etc. And the final declaration will include all income from your quarterly end of period updates and your other income. Cliff has said, will carried forward losses be applied quarterly? Losses are in relation to the EOPS statement, and that will basically depend on how often you want to submit it. As far as we're at the moment, the EOPS will include capital allowances, adjustments in terms of your expenses or income, so tax and accounting adjustments, as well as any relief for losses relative to the business. So if you want to wait until the end of the year and include an EOPS submission for the full year, that's when the losses will be taken into account. If you are submitting EOPSs more often than the minimum required of one, then you would include the loss relief on there. As far as we're aware so far, from what I've read, that is what the understanding of the EOPS is. If there's any changes to this, then close to the time, HMRC will announce the change, and no doubt it will be covered in a topic closer to the time. I believe the questions are starting to dry up. I think I've answered them all. Any further questions, anything that you've not understood, anything that you want me to go over again, any slides that you want to see again, let me know and we can just flick back. If not, and we're getting towards of it, then I'd just like to say thank you for everyone that joined in. Hopefully you found the webinar useful. Keep your eyes peeled for any further updates in terms of making tax digital, and hopefully you'll receive any marketing emails from us once the software is live on Go Simple Tax, and you will be able to then see what is required and how it will look for yourselves going forward. Any questions, then make sure you log on to Go Simple Tax, click the little red question mark in the corner, and just submit a support ticket. Direct it to myself if you wish, Aidan, AIDEN, and mention that you've been on this webinar and that you have a further question, and we can answer it through the support system that we provide. So just having a look there, and the thank yous are coming in now, so I don't think there'll be any more questions. I'll wait 30 seconds and then we will end the webinar. So thank you everybody for joining. And as I say, any further questions, make sure you get in touch. Hopefully you've learned something, and hopefully those that answered no to the poll at the beginning have now changed that to a yes, or at least you know something about it rather than nothing at all.